Happy Monday, everybody. I hope you had a great weekend. Here we are, just about the end of summer, the last Monday in August. Today is August 29, 2022, and this is your all-important Monday market update. As been the case in recent weeks, this update's going to be a pretty steamy one, so I'll try to stick to the facts, and special videos can come if necessary. Even though most of the news came on Friday, I'm going to zip through the rest of the week's action because it is important. Stocks opened sharply lower on Monday as the previous Friday's selling continued as focus turned to the Jackson Hole meeting of the Fed and Jay Powell's Friday speech. More on that in a moment. Overall, the S&P 500 finished the day down 2.14%. The Dow was down almost 1%. The NASDAQ was down a little over 2.5%. The dollar was notable as it hit a new closing high for 2022, over 109 for the first time this year. Little market movement in the markets on Tuesday as we saw sideways action across the board. Eco numbers in Europe were, you guessed it, better than feared, but U.S. eco numbers were pretty ugly. Composite PMI, new home sales, both underwhelmed. Bad is good on this day. Treasury yields and the dollar were both lower. Most of the day it was steady with a positive twist, but then the news broke that 2 of the 12 Fed regional banks had preferred a 100 basis point rate hike in July. One actually wanted a 50. Added that to where the White House eco forecast downgrade revision to growth and upward inflation. Sounds like stagflation again. Not sure. We'll have to see how that goes. Overall, someone stole the rose-colored glasses, or at least changed the colors. The S&P 500 was down 0.25%. The Dow was down about 0.5%. The NASDAQ virtually flat on the day. Bad numbers were not enough to change the narrative from the Fed on this day. Everyone is focused on Friday's speech from Powell again. Hold on, more to come. Let's recap Hump Day. Stocks dropped on the open on Wednesday after U.S. eco data. Good news is bad news. Data indicated that growth is not all gone. The resilience of the economy is amazing, but it all depends on how the Fed reads those tea leaves. The markets continue to churn around to the position for Friday's speech. The S&P, Dow, NASDAQ all up very slightly. T-minus 1 day until Powell speaks. Thursday, stocks opened with a bit of a positive tone. Solid eco data in Europe, better than expected revision in GDP in the U.S., and pullback in weekly jobless claims. Good news, bad news. But the rose-colored glasses were out again, and the Fed heads keep telling us how forceful they will stay with inflation, but the market seems to continue to ignore that. S&P 500 closed within a point of 4,200, a nice, important round number, up almost 1.5%. The Dow up 1%, the NASDAQ up over 1.5%. Friday had stocks opened the important day sideways, as you'd expect. Thoughts did lean that Powell would be negative for the market, but no one knows until he speaks. On the eco numbers, the core PCI print, that important inflation gauge, came in a bit cooler than feared. Yes, I'll keep using that term until the news stops reporting it that way. There was also a bit of a slowdown in spending reported. Then Powell stepped to the mic and said, you guessed it, pretty much exactly what I've been telling you he's been saying, and backing his Fed governors. At first, it did not appear that the market wanted to listen. Still, like a parent to the children, he had to make it even more clear. First, they will raise rates to bring inflation under control. That is their goal. Second, 1 month of cooling eco data is not enough to convince them to stop. So, maybe a lesson from the 1970s. They'll keep going until the job is done. Finally, the market got the picture, and not a good picture at that. Risk off was the mode of the afternoon. All indices down over 3%. The Dow was the best of the bunch, just about down 3%. S&P down 3.37%. NASDAQ down just under 4% on the day. Overall, another down week. All the indices were down about 4% for the week. Let's look ahead at this week. Will the red still be the color of the week? As of late Sunday night, it looked like there would be some follow-through today. As of this morning, we're still getting moderate selling. The avalanche of sell orders are not there this morning. I'm not sure what direction the market's going to choose. We'll just have to see. This is the week before a long Labor Day weekend, so it may get a bit sleepy later in the week. The agenda and the situation we're in make that unlikely, but you never know. Let's see what we know will be going on this week. The Fed Head World Tour. Monday, Brainerd. Tuesday, Barkin and Williams. Wednesday, Mester. New Fed President in Dallas, Logan. And Bostic grabs the mic. On Thursday, we'll get Bostic again. Then no one else to wrap up the week on Friday, at least not on the schedule that I have. As for the eco data, it will depend on which glasses people want to hold on to. But we'll see more housing data. Will that really matter? We know that housing's cooling, or it has cooled, but we can rest assured that the banks are better set. At least that's what all of the reporting has said. Consumer confidence and jolts again. I did hear some comments late last week questioning the reality of 11 million job openings. Are they really there? This will play out in coming weeks, so listen out for that. PMI, jobless claims, productivity, construction spending, and yes, the number of the week, unless something else steals the oxygen in the room. First Friday of the month, last of the summer, payroll numbers. There are a lot of questions about a recession with a strong jobs number. Is it different this time? We'll just have to see. There's sure to be market fireworks this week. Remember, there's no Fed meeting in August, just Jackson Hole. So they did have to do, they can do a rate hike between meetings, but is that yelling movie in a crowded firehouse? To quote the late great Robin Williams. You know what I mean? Is that sending the wrong message? If not, we're on a long 3-week edge of your seat bounce around tour of this month. Remember, September and October, without the extra fireworks, are a few of the most volatile months of the year. Watch for big earnings revision. This is what we need to keep an eye on. The Fed is telling us that what they're going to do. The companies are telling us what it means to them. Is anyone listening? That's the big question. I'll continue to keep you in the loop as I see it and watch for a special report if it's warranted. If you missed the Friday video this past week, you missed the info on the student loan debt forgiveness, an apolitical view of it from the personal financial planning side of it. That's where that was. Back to more about how to navigate this market this coming Friday. Remember, we focus on the long term and your goals. That's the way we navigate. Please stay in touch. There's a lot going on. Please call me or email me if you want to get an update. Finally, a big shout out. Welcome to the most recent addition to the Mount Pleasant IHT family, Max the puppy. Not sure he'll make it to the Bring Your Puppy to Work Day, but he is a cute one. Have a great week and stay in touch.